Greetings. Welcome to my weekend market recap, 12th August 2023. I am Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques that I develop. You may contact me using my email ID info@superiorprofit.co. I regularly share live market and stock analysis on my website superiorprofit.co, Twitter handle Superior Profit, and YouTube channel Trading Profitably. All these are open to the public and you are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. I use the Q systems for my trading. Q has multiple components. All the components run on the Metastock platform, and the technical analysis component runs on TradeStation as well. That was the last slide of the presentation. Let's continue with the live system. Let's start looking at a few markets other than the USA before coming to the USA market. Let's start with the dollar index first. And as I do sometimes, I will relook or review what I discussed in the previous session and show how the analysis played out. In the last market recap, I showed this trendline resistance and mentioned that you may watch for it to break out to the upside. And if that happened, that may have a significant impact on the market. And it has indeed broken out of the immediate trendline resistance in the daily chart. There is another trendline resistance, but that is some distance away. There is also a weekly trendline resistance, probably at the same level as the next trendline resistance. But as of Friday's close, what we have in dollar index is a possible trend following long setup that is shown in the ribbon on Q Global running on Metastock. If you applied all the checklist conditions, it will meet the checklist conditions of not only the trend following long setup but also a breakout long setup. So unambiguously we have to decide that dollar index is bullish, and if dollar index is bullish, the market may not be so bullish. We'll look into it later. But let's look back further. The more we look back and see how we could have and how I did actually analyze the markets before knowing the results, we would know how well the Q techniques are working out. When dollar index came to the recent low, where were we? We were at jump thrust low and also at price extreme low. And as I mentioned several times, this pattern keeps on working out over and over again. At price extreme low, jump thrust low, came a sudden big move up 3, the parent of all bullish momentum. And as I repeatedly say, almost always it leads to a further bullish move. And in this case, again, this worked out. Not only did it go up as of Friday's close, it is giving another proper long trade setup. That is dollar index. Let's now quickly look at some of the global markets. First, Australian market, all ordinaries. not that one, AORD. All ordinaries is continuing to be inside a sideways market, both in daily and weekly. It is somewhere in the middle of the sideways market, that is a no trading area. If this trend line support can be broken with a bearish color candle or at least neutral color candle, then you may look for a short setup. But that has not happened yet. Right now it is in the middle of the sideways range, that is a no trading area. Yes, it is a little bit to the upper side, but not at the upper edge, so we are not able to take short yet. If we have a bearish color candle, red or magenta, or even if we have a yellow bearish shape candle, then we may look for bearish setups. Right now I will not look for bullish or bearish setups in Australian market. Sideways market, no preferred trading direction. That is the conclusion. Japan Stopics Index next. Topics is moving inside a range. However, here the range is narrower than we saw in the Australian market. It is right in the middle of the range. Yes, it has a bullish color, bullish shape candle. However, it is right in the middle of the range. Q guidelines is not to take any trade. So sideways market again and no preferred trading direction. Next, China CSI 300 index. And though I am looking at global markets, as you know, the same exact analysis can be, and I do regularly apply them, can be applied to the USA market as well and vice versa. Let's look at China CSI 300. That is also moving inside a range. Closer to the lower edge, both in weekly and daily. If it can bounce up from the lower edge, then I will look to buy. But that is a big if. It has not happened yet. As of Friday's close, both the daily and the weekly have bearish color and bearish shape. So I'll have to wait to see if Monday or next week sometime price can reverse up from the lower edge. That will be a buy signal. If on the other hand the trend line support is broken, that will mean a breakdown in both daily and weekly. I may look for short setups, but not in CSI 300, because for CSI 300 the stop will be very far away by the time the breakout to the downside happens, if that happens. That is how I am getting ready for the market. No trade setup yet, no preferred trading direction yet. So 3 out of the 3 global markets are moving sideways, no preferred trading direction. What about India's Nifty 50? If you followed me on Twitter or if you watched my previous market recaps, you would know that right when the bearish headwind came in daily and multiple possible reversal signals came in weekly, one after another, from that time onwards, I had stopped buying in the Indian market, rather I had started shorting. All my recent posts in the Indian market had been on the bearish side. That is because I was taking reversal trades while the market was at the very top, and Q Systems is unique in its ability to give us such trades. Market is in a sideways range now. Earlier it was in an uptrend, I could catch the very top, started shorting. Now it is inside a range and in a narrow range. It is near the tip of the triangle. Friday closed with bearish shape, bearish color, even a bearish flow candle, and the weekly backdrop is bearish, shape is also bearish. Because it is inside a range, it has not broken down below the trend line yet. I don't have any preferred trading direction, but it looks more likely that price will break down further. Even if it tries to go up, it may find resistance in the trend line resistance in daily and may reverse down from there. That will give an even more attractive shorting opportunity. Now let's look back again. Remember the pattern in dollar index. Here we had the mirror image pattern. We had jump thrust high at price extreme high, then all of a sudden came big move down 3. Almost always, as I say, it works, and that was one reason I started shorting in the Indian market. And it is amazing how this pattern works, and I shared them publicly before knowing the results. And it's even more amazing in a way that people still continue to buy at the very top even after this pattern appeared, meaning there are people who have Q systems, who understands this pattern, who knows the success rate of this pattern, but they keep on buying even when the price was going up. And I know some of them are holding long trades which are not working out. Now, why would one do that? As I repeatedly say, and as it is well known, the market direction is most important in trading success. Its weightage can be as high as 50%, 20 to 30% weightage to industry strength weakness, and only remaining about 20-25% weightage has to be given to a stock pick. So when the market, which has high weightage of 50%, was telling us that market will most likely come down because this pattern almost never fails. I hesitate to say never fails, but you know the result if you are tracking this pattern over last couple of years. Almost never fails. So why would one still continue to buy? The wiser decision, or rather the disciplined action, would have been to start locking in profit in long positions and look to short stocks as I did. This pattern worked in dollar index. Again, this pattern worked in India market, and we'll later see how beautifully it worked in the USA market again. Before that, let's look at the last of the global markets we see, FTSE index, UK market. That is also inside a range that is at support, in a range in both weekly and daily. That is not an area where I would like to trade. If you notice, several of the markets, namely UK market, India market, as well as Chinese markets, they stopped right at trend line support, right at trend line support with a bearish shape candle on Friday. Now, if Friday's candle closes so bearishly, if you have observed, it tends to go down the next week. Tends to. It's not a trade setup. We'll have to have proper trade setup to short, but it tends to go down. But this is not certain in this week. Why? Because though the Friday's candle closed very bearishly for India, for China, for UK, all of them stopped right at trend line support. So we have possibility of the market going up as well as coming down. And even if it goes up, I am not thinking that it will breach the trend line resistance in any of these three markets. Overall, the markets tendency seems to be going down further. So even if it goes up, I look to probably short at a lower high if I have a proper short setup. So I'll wait to see the breakdown. If that happens on Monday in all these markets, I'll be happy to short. And now let's look at the USA market. Let's look at SPY. I'll continue to use Q Global on Metastock, but for USA market, you could use Q Elite on TradeStation as well. Maybe I'll use Q Elite also sometimes. SPY. If you follow me on Twitter, and I highly recommend that because I share tweets in real time, almost, not almost, always knowing before always before knowing the result. So what I mentioned in Twitter several times last week was that to keep an eye on the trend line supports that were there, as you can see, in not only SPY but few other market ETFs as well. And I mentioned that if those supports are broken, that will be bearish. You can see the weekly support is now broken. Daily broke on Friday, but the candle closed higher than the open. So I would not have shorted in the USA market looking at SPY at Friday's close. But if on Monday it continues to go down again from an extension of the trend line support, that will confirm the breakdown, and I will be happy to look for short trades again. Will I short SPY? No. As is often the case for break up or break down conditions, the stop is again far away for my liking. The recent high will be far away. So for SPY itself, I will not short, but I am sure if SPY continues to go down next week, there will be plenty of other stocks to short with lower risk, meaning where the stop is not so far away. So SPY has actually broken below trend line support in both weekly daily. We'll have to see if it continues to go down next week. What about QQQ? QQQ has also broken down below weekly trendline support. And let's look back. The bearish headwind in the weekly caught the very top, and that is why whenever the bearish headwind comes in weekly or daily, I am taking action on my trades. One action is to protect profit in existing long positions, and if the headwind short setup is applicable, I am happy to take reversal short trades as well. Preferred instrument would be short call vertical. It has broken below support in weekly. However, I see in daily it stopped right at the yellow direction line, and also importantly it has an indecision candle. So again on Friday's close I am not going to short anything, and again here like SPY the recent high is too far for me to short QQQ. But if next week it continues to go down, breaks the yellow direction line support, I'm happy to look for shorts in QQQ constituent stocks. I'll not like to short QQQ because stop would be far away. Again, look back. Jump thrust high, price extreme high, came all of a sudden the big move down 3. And at that time, not today, at that time I had mentioned of this pattern and explained why that changed my view to be bearish. And if you remember, if you look at my previous market recaps, from somewhere around that time, initially I suggested only buying stocks with high dividend yield. Footlocker was one. And very soon after that, all my recent trade ideas had been on the short side. I could use this very effective pattern in addition to some signals I saw in Q Finder what did I saw in Q Finder, and I shared that was the bearish headwind in the weekly interval was exceeding the threshold. That made me turn my view to be bearish, and also we had the Hindenburg signal. We look at the Hindenburg signal later in market breadth. I'll go into a bit more today probably. Those market level signals were very accurate, and again there was, in my view, no reason to continue buying when we had all these patterns coming in one after another, which we know were very effective in the past. So I changed my view from bullish to buying only high dividend stocks and then only to short stocks. Again, like SPY, my view is that even if QQQ recovers, it will probably make a lower high and come down. That will give me an even more attractive shorting point. Let's look at DIA. DIA is relatively stronger. It is not coming down for 3 weeks in a row. In fact, for 3 weeks plus 1, 4 weeks in a row, it is practically unchanged. We can see that in the weekly chart. The closing price is almost unchanged for 4 weeks. Is that bullish? No, that is not bullish. It is relatively stronger doesn't mean it is bullish. What it means is what we can see. What it means is that it is not moving anywhere. That is not a time to buy, not a time to short. And lastly, let's look at IWM. But for IWM, let's switch to Q Elite and let me look at the future symbols. In my real life trading, I am looking at the futures as well as the ETFs. During the market recaps, I am saving time for you and me by looking at only one of those sets of instruments. But for RTY, there is a reason why I wanted to look at the futures. Small cap futures, RTY, equivalent to IWM. See this trend line resistance in weekly, and this was there all along. Because of the trend line resistance in weekly, on this week, even when price came to the very top, I was not bullish. On this week, even when price came to the very top, I was not bullish. Even on this week, when price came to the very top, I was not bullish. Rather, I explained in all of those cases, you could look to accurately take short trades, either using the futures on intraday fine-tune chart or using ETF or using probably options verticals. All those worked very well. It never breached the trend line resistance. First, the backdrop color was bullish, then it turned neutral with a bear release signal, and this week it has turned bearish. In the daily, once again, the bearish headwind caught the very top of the recent move. That actually coincided with price hitting just above the weekly trendline resistance and coming down. So remember the Q guidelines. If the bearish headwind itself doesn't give a short setup, here we did not have a short setup for bearish headwind signal, then we could look to short the first bearish flow after bearish headwind, which would be the very next day. So from the very top itself, you could start to short. So all these signals are available to you if you are using Q systems. They are available to me. That also explains why I started shorting from the very top. Is the market in a downtrend? No, none of the market ETFs or the futures are in a downtrend, but we have beautiful and very effective reversal short setups. We know the market view was changing to the bearish side. we could, and I did, and I publicly shared, kept on taking short trades when the market was rolling over. And I think all of them turned out to be profitable. Currently, the weekly is bearish, but daily on Friday has a indecision candle, and it is already very far away from the recent swing high. So again, like we saw in the other market ETFs, namely SPY and QQQ, I'm not going to short IWM itself, but if it continues to come down, am I going to short it? Not likely, because it has a yellow line support that may be broken very soon if price comes down, but then there is another trend line support. So looking at the different charts, I would probably prefer to short QQQ constituents or SPY constituents rather than small cap stocks, and certainly not industrial stocks. They are relatively stronger. Relatively stronger does not mean bullish. Because it is already far away from the recent high, here also price may recover somewhat, but I am not thinking that it will make a new swing high. I am thinking it will make a lower high and price will come down. That will give me an even more attractive shorting opportunity. And this situation that I am anticipating, I can anticipate that in QQQ, SPY, IWM. Dia is moving sideways. There is nothing to anticipate there. Very flat. But remember that 3 out of 4 market ETFs, I'm thinking even if price recovers, it will create a lower high and price will come down. And let's see if I have further reasons to have that anticipation. And that further reason may be from the market internals using Q Global Market Breadth Total View. So far I was looking at external view, that is looking at the ETFs and futures. Now I am switching to market internal health check using the single chart picture of market internal health, market breadth total view. This is extremely valuable to me, to everybody who has this chart, and when important signals occur, I usually share them publicly even if you do not have this chart. So it is useful to learn to read this chart. How can you do that? You could go to my website superiorprofit.co. It's opening on another monitor. Let me drag it here. Even if you don't have market breadth total view, it is useful to go to my website superiorprofit.co, then go to the learn page, scroll down to the master classes and watch the master classes of Q charts, technical charts, non-technical analysis also, like sector, industry rotation, fundamental analysis if you are interested in those, but watch the videos on Q Global Market Breadth. Then you will understand and appreciate the visual signals available on this chart. And again, beautifully it worked out. When this series of Bango signals came, that was a calculation created by Mr. Ian Woodward, may him rest in peace. I implemented it in market breadth total view along with other signals. So when this exuberant buying came in, I was cautious. Then came a Hindenburg alert in yellow color. And all these signals, when they were coming, I was sharing them publicly. And that was another reason why at the very top, I switched to buying only stocks that were having high dividend yield, so I could hold them for long term if required, and my preferred instrument was, as I shared at that time, shorting the puts. And after the Hindenburg came, I started to short, and I was combining the analysis from QFinder's weekly headwind alert and also the alerts that came from jump thrust high, price extreme high, then came big move down 3 in market ETFs and futures. Then we had Hindenburg confirmation. In between we had Phoenix signal. There was no bullish signal. There were one after another market breadth bearish signals, and price was slowly coming down. That explains why so confidently I could switch to bearish trades at the very top. And there were also signals from percentage stocks above 50-day moving average, and I showed in previous market recaps, though for market breadth total view it did not quite hit the upper extreme for most of the major indexes. In fact, all of them except small cap, it hit the upper extreme. Also for 3-month new high low, other than for small cap Russell 2000, everything hit the upper extreme. So those helped me change the market view to bearish view at the top, very top. And that is the beauty of the Q systems. Even if you did not short, I don't see any reason why you would not short for short-term trading. But even if you did not short, you could at least protect profit in your long positions. You could apply trailing stop, or you could even sell calls against your long-term holdings. Now, in the previous market recap, I surmised that why there was no distribution count, though price was rolling over. And I also showed in the previous market recap, I just noticed that at that time, that on the way up also, for this long way up, there was no large accumulation count as well. So I surmised in the previous market recap that because on the way up there was no large accumulation count, it is probably okay to have no large distribution count on the way down if price came down, and indeed price came down. Then after the market recap of last week, I thought, why not I look back at previous Hindenburgs? Remember what the Hindenburg represents. And as you can see, I'm spending more time on the market again because market seems to be turning over from bullish view to bearish view. When market is just going straight up, it is easy to make profitable trades, and that is what probably many traders were doing, and they were thinking they know how to profit from the market consistently. But this small rolling over is showing them that probably they did not master it yet, especially the newer traders who are making profit on the way up. Probably they did not master yet. The first thing to master is to be able to read the market. So I wanted to go back. I did go back to previous Hindenburgs. What do they represent? They represent professionals selling, amateurs buying. Amateurs tend to buy at the very top. Recently, I was having a Zoom meeting with one of the USA traders, very experienced. He also mentioned that FOMO, fear of missing out, kicks in at the very top for amateurs. That was shown by the Bango also. So if professionals are selling to amateurs at the very top, do we expect a lot of volume? Probably no. So I wanted to look back. So let me scroll back to the previous time that we had confirmed Hindenburg. That is represented by the fearsome skull signal here. We had a series of Hindenburgs here, 4 to be precise. And notice when the Hindenburg signals came one after another, I looked down, there was no large distribution count from here. So when the professionals sold to the amateurs last time, the large distribution count actually came quite a few days later. By that time, price had come down somewhat. Individual stocks might have come down much more. When amateurs started to realize that their long positions are not doing well, then the larger distribution count started to kick in. But we did not have to wait for that. I could start shorting earlier. So that gave me some, you may say, comfort that okay, last time also when Hindenburg's came, big distribution counts took a while to come. Then I looked back further. I have enough data to cover another Hindenburg series that came here. Here, this was the warning before that. Notice when the Hindenburg came, there was no large distribution count. In fact, there was no distribution count at all. The large distribution count came quite a few days later. That probably is expected. Now, thinking about it, because Hindenburg represents selling by professionals. When amateurs are buying, the professionals would not like to disclose that they are selling by showing up in the higher distribution count. So that pattern is appearing now also. We have Hindenburg confirmed, but we don't have high distribution count. I was a bit surprised to observe that last week, but now after reviewing previous occurrences, I think it is normal. Now also notice that after the Hindenburg confirmation, market may not come down immediately. It may come up little bit. After the Hindenburg, it may move sideways or slightly come up. And remember, this is a custom index. If the custom index went up little bit, probably some part of the market went up more. And then it dropped. So now you can understand why when I looked at the external view of the market, I surmised that even if market goes up little bit, I am expecting it to make a lower high, because that is the pattern that happened earlier also. Yes, market may move slightly up or a bit more than slightly up, but in the past after Hindenburg, more often than not, it had declined further. So I am continuing to have a bearish view on the market. But having said that, the market ETFs are far away, market futures are far away from recent swing high. It may go up somewhat, and that will be good for me and people who are ready to short, because that will probably give even more lucrative shorting opportunities. So this market level analysis from market breadth as well as from that jump thrust high, price extreme high, big move down 3 helped me and other Q traders to short the very top. What also helped, and I shared that in the previous market recap, the bearish headwinds in the weekly interval that hit the threshold. Let's look at the Q finder. Now market has come down somewhat, so of course I don't expect a large percentage of bearish headwinds, because that comes at the very top. Now it has come down somewhat, so I don't expect that. Overall though, as I expected, and as you could expect looking at my bearish trade sharing one after another, weekly interval for technical breadth is bearish across all the categories, all strength category, trend continuation, trend reverse, everything is bearish. On Friday, this is the daily interval of technical breadth, it turned bullish little bit. Again, that was expected, and see how using Q systems I could anticipate these things happening, because price was already far from recent swing high. When people were starting to realize that market was getting bearish, probably it would have stopped selling heavily. That happens again and again. And when people started to realize on Thursday that, oh, market is coming down one after another day, probably on Friday we could expect that it would pause somewhat. and it indeed did that, but that is good. Not only did Friday's technical breadth turn bullish, even if next few days turn bullish and result in a lower high in the market futures ETFs, as I mentioned, we'll have an even more lucrative shorting point. This one day's bullish view did not change the overall view of market. Market view is best decided from market breadth analysis and using combination of weekly, daily breadth insights, not just daily breadth. By the way, another thing I noticed from many commentators, they focus too much on the daily interval. So one day they are bullish, next day they are bearish, and they are looking at all the media news, whether central bank heads are talking something, whether some economic result is coming up. That does not help in profitable trades. It helps in you becoming bullish one day, bearish the next day, bullish the next day, bearish the next day. It's a nightmare situation mentally, psychologically. What I do, as you can see, I base my market view and stick with it until my market view changes. And market view doesn't change just because one day SPY came up little bit, next day SPY came down. It doesn't change like that. That is one secret to my success of trading. You will notice neither in my YouTube videos nor on Twitter posts I ever mention about this news coming up, central bank meetings coming up, or major economic events coming up, and decide trades based on that, or decide not to trade based on that. And how is the outcome? The outcome is actually pretty good. Success rate is probably fair to say, at least people who know, who follow my trades, be in India market or USA, they know my success rate is very high. But it's not about boasting, it is showcasing something. What it is showcasing is, once you study the market, you can ignore the news. Do I look at the news? Yes, I have real time professional news access, not like professional, but professional news access through Icon. Several of you may also have that. I look at the news, but none of my trading decisions are based on that. And the success rate is high. So probably you may, if you are looking at so many news and deciding market or trading direction based on that, you may think about that, whether to continue to do that or not. Let's look at market also through sector, industry, stock breadth using Q edge from 1 month period to 1 day period. And this was very green a while ago. Remember when the market ETF futures were at the very top, this was very green, and I started shorting from that time. Now it is mixed. I cannot say it is very bearish, but relatively speaking, and that is very important. It is not only important to see where the market is, it is equally important to see from where it is coming. And the previous pictures, if you keep in mind, this is a huge deterioration, and that is bearish. Some people may look at it, and again, if you look at day to day, you will get psychologically very much troubled. Friday is bullish. On Finder also we saw Friday is bullish. Does it make my market view or your market view bullish? No. Let me share one interesting story. I talk to many traders. They educate me not only about what to do, they often educate me about what not to do, reinforce those ideas. So one stock was coming down, 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 down. Then one day it had a bullish candle, and probably that person is also going to watch this video, but that is good. We learn from each other. So there was one bullish candle after a long decline in the stock, and this was the daily view. And then there was a chart that he shared, that was the fine tune chart. It had the early range high, early range low, and price went up from early range high. So he made a comment in one of the Q Traders group that this stock is recovering. Where was the recovery? Just one day on a 5-minute interval, price breaking about intraday pivot could be an opportunity to day trade, but that was not bullish. That was not turning from bearish to bullish. That also shows that we don't decide our preferred trading direction based on one day price going up, next day price going down, not like that. Then you will be always tormented, if I may say so, about why your trades are not working, and you may come to the conclusion market is manipulated. It was not manipulated. Even if it is, you can still make profit if you know how to read the market. And what not to do is to base your preferred trading direction based on one day's view. Friday overall we can see the sector industry stock breadth is bullish. We saw technical breadth was also bullish. That does not change the market view. Again, as I mentioned, I am not going to short right now because it is somewhat below recent swing high for all the market ETFs, but market view is remaining bearish until I have bullish signals in both external and internal view of the market. 5-day period is still bearish, 2-day is also bearish, 10-day is also bearish. 1 month was very bullish earlier, now it has declined a lot, so we have to say that is also turning bearish. Of course, the 1 month will change more slowly. So all the periods are effectively bearish, only 1-day bullish does not change the preferred trading direction. What about bucket analysis? Percentage of stocks where they are within their respective Bollinger Bands. 62% of stocks are now below mid Bollinger Band, that is bearish. Again, when the market futures ETFs were at the very high, this was very green, this picture. Now it has turned red. Now probably people are waking up to the fact that market is rolling over. But I could and you could short the market at the very top if you paid attention. And again, I want to repeat this fact. Though I am sharing this publicly and I talk to some of the Q traders regularly, they have become my friends, it's amazing that they were still keeping on buying in spite of knowing that those signals work quite well. I did not buy, and I always say you can know what I am doing from the tweets I post before knowing the results. So now the market is bearish in terms of the stocks positions relative to mid Bollinger Band, and across the different buckets it is more bearish than bullish. It is not oversold, so it may go down further. That is my view of the market. Market view is most important, as I said. Now, why don't we look back at some of the recent posts? Let's look at Twitter. No pick and choose. Pick and choose loses its value because then I can, or you can choose only the profitable trades. I'm not trying to show profit, and I don't know if I'll be able to. Why it's asking me to log in. Okay, I'm not going to try to log in. I need to get the code. Okay, never mind. I'll not look at the tweets. You may look at the tweets, but I remember some of the stocks. Let's look at Carnival, CCL. This was a very bullish stock for a long time. It came to jump thrust high, price extreme high. Here also, let me redraw them. I think this example, this is a live example I shared before knowing the results. We had jump thrust high at price extreme high, then came a big move down 3. And yes, price did go up. I think I mentioned it in the last market, but I was looking to short. In the weekly, I saw from backdrop being bullish, it changed to neutral, then changed to bearish. So I think on this day, one, two, three. In fact, I think if I'm not wrong, the last market recap, I shared my bearish view on CCL. Let's look at the stock with historical trend lines that we have in QLE. Yes, I had my last market recap in the previous weekend, and that time I identified CCL, if I'm not mistaken, I think that was the time in market recap, as a breakdown short candidate. It tried to go up and then it came down. So far the trade is working out all right. Now, if you notice, and I don't know if I explained it in the previous market recap, I think I did. It's worth reviewing. Prior to this breakdown, it was not possible to short the stock because either it was in an uptrend or it was inside a triangle pattern. And last Friday, this trend line was not there. So it gave us a, if this trend line was not there, it gave us a proper breakdown short setup. And that is how I identified CCL. What helped me take the trade with more confidence is the pattern that somebody sold very heavily and they are probably not done with it. If you shorted it on last Friday like I did, that would be fine. You could also short it on this day when we had a possible flow short setup. I can see the weekly was already bearish in color, so you could also short on this day. So this day was a breakdown short setup. Then we had a trend following short setup. Both of them worked out. Now some of the instruments were at a very high level and I shorted it right near the very top. CCL was one. The other one I shared was, if I remember correctly, XHB. Yes, I am quite sure I shared it. XHB. Is it in a downtrend? No. It was one of the strongest industries. And whenever something is going up so strongly in the weekly, very sharply, without any pullback at all, I am looking to short it. But I am going to wait for it to give me enough signals. It gave a bearish headwind at the very top, near the very top. That did not give a headwind short setup. And very next day, it gave a bearish flow. And I shared publicly at that time that first bearish flow after bearish headwind, if it gives me a low risk entry, that is a shorting opportunity. And because that was a reversal trade, my preferred instrument would be short call vertical. That is also in a profit now. Now, why I shorted XHB was because it was at the very top, but it was an ETF sometimes. I don't like to trade ETFs because I can look at constituent stocks, but sometimes it is easier to trade ETFs because I don't have to look for individual stocks. But I did share some home building stocks also. Let me look at one of them again, Pulte Homes. Very strong up move. Came a bearish headwind at the very top in weekly, came the bearish headwind at the very top in daily. And already we had jump thrust high, price extreme high, big move down 3. So here also I am having a bearish view, but there is no short setup yet because there are multiple trend line supports. Remember CCL just now I showed, I waited for a proper breakdown setup and then short it. So you could do that in PHM also. The concept is the same. It allows us to short at the very top. It allows us to buy at the very bottom. And if I mentioned about buying at the very bottom, this is not a market to buy because my market view is not bullish. Having said that, if market view is not bullish, it may be worth looking at some defensive stocks. And with the current market situation in mind, if I look at defensive stocks, I like to look at stocks that has some dividend yield, maybe 4, maybe 5, maybe 6%. So let's look at this stock, Pfizer, PFE. This may not be the best stock. You can see in pharmaceuticals, there are many other stocks. We could look at their scorecards using QVital, this program, and choose a better one if you find one, or I find one. But I came to Pfizer because one gentleman mentioned the stock. It has 4.5% dividend yield. That is a decent dividend yield. Not very high, but decent dividend yield. We may be able to short the put with the thought that if we get assigned, we'll hold the stock and probably sell out of the money calls on it. That is a feasible and profitable trading strategy if we do that on fundamentally strong stocks. And I can see it has undervaluation. So that allows me to buy the stock. How far is it above 52-week low? If I'm buying a high dividend yield or reasonable dividend yield stock that is undervalued, I'd like to buy it at a lower price level, and it is just 4% above 52-week low. That is an attractive point to buy a stock with this strategy. But I will still need a technical setup, and let's look at its industry score also. Look it up from QEdge. Pharmaceuticals is improving in relative strength in score, and we can see on Friday it is one of the most accelerating, top 20%. Top 20%, be it in score or in acceleration, they show up with a checkered background, so all color coded visual signal. So it is accelerating. That allows me to buy in the industry. What remains is to check the stock's technicals to see if we have a setup or not. Let's open the chart. I'm also in the meantime looking up the seasonality of the stock. Okay, we are in the month of August. August, September, October, seasonality is neutral, yellow color. So we have no additional buy signal from there. Let's look at the chart. Pfizer. Okay, if Metastock is, I should go to chart application. Okay, chart application, then type Pfizer's code. Let's look at it using the weekly daily. Why weekly daily? That allows me and you to apply the checklist conditions. Just spend a few seconds, and what we see is that it is getting ready for a buy, but not yet. We have a bullish headwind. In fact, using that bullish headwind, we could consider shorting the put somewhere along the way. Not sure if we could. Looking back, I don't see any day where I would like to short put on Pfizer, but now I see that the watermark pivot support created by the bullish headwind held. Even better, it created a false downside breakout, which was associated with a bullish indecision at the very bottom. Then came a bull release signal. The candle color turned from bearish to bullish without going through neutral. But at all these points, I am observing the stock, but I am not buying yet because I am waiting for this trend line resistance to be broken. Is it okay to pull the trigger before? No, not using Q guidelines. Could somebody buy? Yes, of course, people are buying. There is volume, so people are buying, people are selling. But using Q guidelines, we would not buy. I would not buy. Not even using short put vertical. What's the hurry? As I say, what's the hurry? If we have a proper setup, we'll have a profitable trade that historically we have seen. Why not wait? So if on Monday you or I see that price is going above the trend line resistance, we don't have to probably wait for the close. We could use fine tune chart to short the put with the assumption that if we get assigned, we'll hold it for dividend and sell out of the money calls. We have to decide the call strikes appropriately, but that is a feasible strategy in a stock that is undervalued at a low price level and showing signs of stabilization. Has not broken the trend lines yet. That will give break out buy setup, so you may look for that. Whatever be the market condition, as you can see, you can look for buy stocks or short stocks. However, if the preferred trading direction based on market analysis is bearish, I am very reluctant to buy stocks, even stocks like Pfizer, unless it gives a very clear buy signal. It has not given yet. I'm reluctant. Market level is very important. So if market view is bearish, why not just take short trades? Yes, some long trades can make profit, but why go against the current? That's my view. And that is what you see in my Twitter sharing. When my market view is bearish, I share only bearish ideas. I'm at 1 hour point. Why I share in so much detail all my analysis is hoping that people will be able to realize the importance of different analysis, the market level analysis, sector industry rotation analysis, and of course technical analysis, also peer analysis in terms of fundamentals, and apply that, not just understand the thoughts as I see in many newcomers, not just understand but actually apply the concepts in real life trades, not keep on buying at the top when we had one after another of bearish signals. With that, hope I share all this analysis. Hope it is of use to at least some of you. And thanks to you all for attending this session. I look forward to seeing you in my next session, most likely next weekend. Have a great weekend. And as these live examples show, as I always say, there is no reason not to do that. Trade profitably. Thank you.